Now, silver and gold were the stories of the day. I'm sure these were all over your X feed or other news source. They gapped up in the overnight price action on Sunday evening, up over 6% on silver, and then dropped down over 10%. And on the day was down actually top to bottom over 15%. So this is looking like a local reversal candle for silver. I was saying on Friday that it was looking like we were entering blow off top territory with this massive outsized candle, and we're seeing that follow through. There were a lot of folks when I posted that on X, and not to, get into fights about it, but we should just trust the data when it comes to things like this, because they were saying, oh, the narrative of supply crunch and different things are going to keep driving the price up. Things like this continue to play out time and time again over history because it's all driven by human emotion. There are early people in the trade that see this kind of massive volume at a certain point, and this could keep running for a few more days. This could just be a sign that we're getting close to the end, and it could have an exponential move higher to $100. I don't know what the future is going to hold. The point is we're getting closer to the end, and the behavior we're seeing is people who were in the trade early de-risking and taking profits, and then people who got into the trade late are panic selling, which causes this massive volatility spike. And this froth can run for sometimes longer than you think, so maybe this will run into January and we'll see those much higher prices, but it's not going to be sustainable in this fashion. Now, after it cools off for a while, in the long run, we still have higher price targets for gold around 4,800. So if gold continues to move up, I would assume that silver would continue to move as well. But we definitely need to cool off for a little bit here soon. Just looking at the daily and even the weekly RSI, how elevated that is at 92. And we are almost at 3. We are at 3 standard deviations overbought, which is very extreme for the weekly. And if we go back to the monthly, which we haven't looked at for a while, but now on the monthly, we are at 2.88. And if we look back in history to previous blow-off tops, we have 2011 here, and then I can't believe we got that high off that small move in '06. We're not even going to look at that, but we got to about 3. So we're getting close to those levels. And then if we look back to 1980, we were at about 4 for the 1980 peak. So yes, it could run more. This had a massive gap up open on the monthly, and we could see those candles, to 100, 120. It absolutely could do that because commodities can do crazy things, but just be careful at this point, I think, is what I'm trying to get at here when we're looking at this trade. All right.